Man, oh man, what wild times do we live in? The upcoming trading week in the world's largest casino is bound to be a historic one. I'm talking trade wars, I'm talking wars, and just when you thought it could get even crazier, I'm talking an FOMC decision where Jerome Powell's going to decide what he wants to do with the interest rates. Obviously, it's going to be crazy, and in this video, I want to be breaking it all down of everything you should be paying attention to, and just as a little bit of a thank you, I want to give you 3 major plays that I'll personally be watching, so hopefully we can make some good tendies. But before we get to all of that, if you haven't already, don't forget to like and subscribe. It really does help me out, and feel free to say hi in the comments. With all that out of the way, let's rock. When the old stock market officially closed on Friday, not only was it the conclusion of the week, but we're now officially halfway through the month. Here was the headline. Dow falls more than 700 points on Friday as attacks between Israel and Iran escalate. Exactly what you don't want to be reading. Anyway, the market did take a bit of a hit, but really, we're still pretty close to the all-time high. In fact, from the all-time high, we are now only down 2.7%, which also means ever since this low in early April, the market is up almost 21%. So yes, in the short term, we are taking a bit of a hit, but when you take a step back, like I said, not that far away from the all-time high. Individually on Friday, you could see the SPY dropped 1.1%, the NASDAQ dropped 1.2%, small cap sector really got hit 1.8%. As I'm filming this in real time, Bitcoin around 105,000, holding that 6-figure mark. And obviously I'll be touching on this, but oil, black gold ripping up about 7%. But coming back to the equities market, it was not good. Yes, there were some green plays such as Palantir and Tesla, and I do want to talk about them, but in general, pretty red. The only thing that's really green in terms of a sector is obviously oil, and that's what happens when there's serious questions about supply, which is going to be directly relating to one of the biggest stories of the weekend. Israel-Iran strikes escalate, deepening fears of wider conflict. I'm pretty sure this goes without saying, but obviously this is one of the most important narratives you should be paying attention to, not only just to be a good informed global citizen, but also especially if you're paying attention to the markets in any manner. Israel and Iran have been exchanging attacks for a third day, with international concern growing that the conflict will spread across the oil-producing region. Once again, that region is that final part of the sentence of why we see energy ripping, because all of a sudden, if it's not being produced, if the factories are being shut down, if there's questions about the supply routes, well, that means that supply is going down, demand staying the same, which means price has to go up. On more of a human note, this entire situation is obviously very devastating. The conflict has resulted in significant damage and casualties, with at least 80 people killed in Iran and 14 people killed in Israel, and has sent shockwaves through global markets. Unfortunately, this does seem like it's going to get worse before it gets better, but here's to hoping some form of a miracle actually happens. In my opinion, what's playing out in the markets is less important than what's playing out in actual reality. Like I said, there are unfortunately casualties, but what we are seeing in the markets is pretty crazy. You had crude oil hitting a new year-to-date high, or almost, like pretty much tying it right here, just ripping over the past couple days. Once again, this is a basic supply and demand question. So obviously, if you are a trader, if you're paying attention to the markets, paying attention to specifically what's going on in the energy markets is very important. The volatility, the hecticness does not stop there. Carney flexes economy first foreign policy as G7 meets in Canada. 7 of the most important global powers are going to be chit-chatting, and don't forget, we're in the middle of a trade war. Mark Carney, Canada's Prime Minister, is hosting the Group of 7 summit in Western Canada, showcasing a foreign policy that emphasizes economic ties, hard power, and alliances to reduce Canada's dependence on the US. Carney has announced plans to increase military spending to meet the NATO target of 2% of GDP, and has also invited India's Modi and the Kingdom of Saudi Arabia's MBS to the summit, despite controversies. If you ask me, I could see this particular event breaking either way. I think it could be bullish, I think it could be bearish. I think it's going to be all dependent on the narratives that come out of this particular meeting of, hey, when everyone's there one-on-one having these conversations, can deals be struck? Is everyone happy? Or is it going to go the other way and all of a sudden the talks devolve and we end up worse off than we were? So obviously I have no crystal ball. I can't tell you which way it's going to break, but I can tell you the news coming out of this event is going to be massively important, and it's probably not the only thing we're going to hear about, because don't forget, China and US officials reach agreement for following rare earth tech trade. Now it's up to President Trump and President Xi. So last week we heard about some of the talks coming out of London, and even though we didn't get really any solidified details, they did both sides try to spin it as more positive than not, and that's why we saw the market kind of pop. And then everyone said, well, what are the details of the trade? And they're like, we don't have the details of the trade. The market kind of came back down. So this is another thing on top of the G7, really just as the scope of talking about the trade wars. This is another thing that this upcoming week we're going to be getting reports about. In a general sense, you're going to have a pretty crazy week in the markets when you have to deal with a war. Same can be said about a trade war. When you put those two things together, well, obviously we get exponentially crazy. And what if I were to tell you we have even more coming down the pipeline? This Wednesday, June the 18th at 2 p.m., we're going to get the results of the FOMC decision. And then at 2:30, 30 minutes later, Jerome Powell, the chairman of the Fed, will be giving us his public speech. At this moment in time, I'm willing to make two predictions. Prediction number one is we're not going to get a rate cut. In fact, there's a 97% chance that we're going to stay at 4.25%, which is obviously where we are right now. And just for those of you wondering where we might get a rate cut, well, if you fast forward to the July meeting, still not likely, 78% chance that we stay exactly where we are. And it really isn't until the mid-September meeting that we have a chance, more likely than not, that we're going to have some form of a rate cut. So that's my first prediction. My second prediction is that when it's announced that there is no rate cut, we're going to get some sort of angry updates from President Trump on his Truth Social account, how Jerome Powell is quote unquote too late. As a very important side note, don't forget that on Tuesday, June the 17th, we're also going to be getting the retail sales update before the market opens. On Wednesday itself, we're going to get crude oil inventories. This time around might be interesting for pretty obvious reasons. On Thursday of this week, the market is closed in observation of Juneteenth. And then on Friday, we're going to be getting the Philadelphia Fed Manufacturing Index. So even though FOMC decision and that conference is going to be the most important macroeconomic thing of the week, there are other things to pay attention to. Please don't forget that it's actually a short and trading week. If you haven't already, don't forget to sign up for the newsletter. It's always been free, always will be free. You don't have to pay a dime. All the stuff we're talking about here, I put into a little bit of a cheat sheet thing. It comes out every single Sunday morning to your email inbox where I tell you what's going on in the market, all the major macroeconomic events such as that FOMC meeting, and then we give you the seasonality for each individual trading day. You can see to start off the week, the bulls generically are in control. But once again, this is how things have played out over the past 27 years. And this time around, especially what's going on with Israel and Iran and how that situation is definitely deteriorating. And I'm not even saying we were in a good position to begin with. Well, maybe seasonality is not going to play out. And just to give you a little looky-see here, Tuesday a little bit more bearish, Wednesday a little bit more neutral, Thursday market closed, Friday a bit more bearish. So that's for the individual days. And for those of you who are a little bit more curious of how seasonality has played out over the past couple of years, here's where you want to check out Edgefold. Over the past 5 years, June is a bullish month, but what's cool here is we can look at the weeklies. We are getting out of one of the most bearish weeks of the year, and now we're heading into one of the most bullish weeks of the year. So if I didn't know any of the major global news going on, I would actually be very excited to the bullish side this upcoming week. Alas, there is some serious negative news playing out on the global scene that you definitely have to consider, but from a pure just quantitative empirical data standpoint, the upcoming week is a historically bullish one. And this leads me to the Mystic Matt's market predictions port of this video, where I want to get into 3 different tickers that I think might have some interesting moves in the upcoming week. I actually want to get this one started with a bonus one. This isn't really one of my 3, but obviously if the situation continues to get worse, and we already kind of talked about this, I think oil could easily keep going higher. So this is more of a news driven one that if the situation doesn't get better, yes, I'm expecting higher highs, higher lows. Pay attention to what's going on in the world of black gold, aka oil, or really anything in the particular energy sphere. Now, on a little bit more of a positive note, even though the market's been taking a hit, it's always interesting to me to see what has relative strength when the overall market has relative weakness, and there are 2 that I think look really good. So right now, Tesla, it is holding the EMA cloud. We do see a nice bounce. This is a higher low. I want to see if there could be follow through, especially as we are getting closer and closer to the robo-taxi event in Austin, Texas. Another one that's looking really good is Palantir. Obviously, this is going to be directly tied to the government and data, and really a good question of what do they actually do, because we know there's some stuff that isn't publicly available, but we know when there's global conflict, Palantir is going to be getting some calls, tying its all-time high. I'm liking the trend. I want to see if this can continue going. Now, Those are obviously three things: oil, Tesla, and Palantir, that I think the bulls, I think they might be in control. For those of you who are a little bit more negative Nancy and you're like, I think their vol could expand and I'm looking for things to drop, I am paying attention to the small cap sector. So yes, it ran up, kind of had an over an extension the past 3 days, lower highs, lower lows. But what I find so interesting are the bets currently being played out in the options market. We are going to a high volatility point at 205. As the market closed on Friday, it's trading just below 209. The high vol point is the most negative gamma, as in price can really start to pick up in terms of its speed. Not necessarily bullish or bearish. In this situation though, we'd be coming from the top side around 209 down to 204. So the velocity of price movement to the downside could easily accelerate. And past that, I also want to point out how there's a massive play all the way down at 198. So watching 205, watching 198, and at that point, you might as well pay attention to 200 because it's a key psychological level. But from an options perspective, what really matters is 205 and 198. So I just wanted to put that out on everyone's radar. Of course, if you want to see all this stuff play out in real time, Monday to Friday, 9 to 11, we have the Kohrs show. I welcome you to be there. Not only am I degenerately trading my own account, but myself and the entire chat have a pretty fun time while we do it. So I hope to see you there. That's what I have for you in this video. Of course, if you have any questions, comments, or concerns, let me know in a comment below. I'll get back to as many of you as I possibly can. That's what I have for you now. I appreciate the good vibes. Hope to see you in the show.